Hello there. Thanks for tuning in to your favorite news destination. You're watching In Your Interest with me, Kabir Naqvi. And on the first segment on IYI, the entire world is talking about how the global oil supply chain has been hit vis-a-vis the Israel-Iran war. So we'll talk about the oil and the market crash because of it. And are Indian investors really safe? So we'll talk about the shocking values. We'll talk about what the Indian investors should do and should you be worried. Let's break this down. The Indian stock markets have just witnessed one of their darkest days in recent memory. With the Sensex and Nifty crashing nearly 3%, this fall has wiped out around 12.78 trillion rupees from the total market value of companies. Brent crude oil prices jumped 25% in a short time and now stand at around $117 per barrel. These prices have gone up more than 50% since the US-Israel war with Iran began. Indian markets are clearly feeling the pressure from these outside events. Higher fuel costs are expected to push inflation higher in these coming days as well. And the government may also have to spend more on subsidies to keep fuel prices in check for people. Now, the rupee has hit a new record low at 92.33 against the dollar, even after the Reserve Bank stepped in to support it. And this means India's import bill could rise sharply and the current account deficit, it may widen. Remember, India brings in 85 to 90% of the oil it needs from other countries. More than 55% of that oil passes through the Strait of Hormuz, which is now under extra risk because of the war. Details from inside a government meeting says, well, it's unlikely to resume soon. The Gulf countries, which form the GCC group, take 13 to 17% of India's total exports. They also send back 38% of all money that Indians working abroad send home. And that is more than $50 billion every year. If the situation gets worse, aviation, transport, manufacturing costs, they'll all go up and affect everyday life and businesses. Let's look at what this means in the short term and in the long term. Right now, the rising oil bill is making the rupee weaker and pushing up fuel and logistics costs across the country. Over time, high oil prices could slow down economic growth, increase the subsidy load on the government, and speed up the shift towards renewable energy. Exports to the Gulf may slow because of higher shipping and insurance costs, and there is a risk that India could lose some market share if those economies weaken. Remittances from the Gulf could also fall if jobs there take a hit, and more people returning home might put extra pressure on the rupee and the current account. This is the third major global shock to hit Indian investors in just a short span. We first dealt with the US tariff tensions under the Trump administration, followed by the painful correction in AI and the tech stocks. Now, this oil surge in early 2026 is testing the resilience of the Indian investor. For those of you who invest, it is important to stay calm. In times like these, it is better not to put money in sectors that depend heavily on oil, such as aviation, auto, we're talking logistics. It is also wise to be careful with businesses linked to the Gulf, like gems and jewelry or some exporters, and to avoid risky small and mid-cap stocks or companies with high debt. Instead, look at steadier areas like oil and gas public sector companies, defense, pharmaceuticals, daily consumer goods. That's going to be the focus. And keep some cash aside. Focus on strong large cap stocks and add some safety through debt funds or gold. We have an esteemed set of panelists that will answer all your investor-friendly questions, the big questions that we're trying to decode tonight. Should retail investors buy the dip right now or wait for oil prices to cool? What steps should investors take right now to protect their savings in this kind of volatility? And will the rise in fuel and transport costs push inflation so high it starts hurting the common families out there? With us on the broadcast, Mithali Nikore, founder and chief economist, Nikore Associates. Many thanks for taking out the time. Vaibhav Malu, managing director, Enzo Group, investor and business leader. Many thanks for taking out the time. And Adit Kothari, foreign affairs and geopolitical expert. Always a pleasure to have you with us on the broadcast. Mithali, let's get these questions going. And, your opening submissions. Is this temporary reaction to these geopolitical events, or is this a warning sign for the economy, for the Indian economy on a macro level? We've seen these are shocking numbers, 31 lakh crore rupees wiped off of the Indian market since the conflict escalated, and it only began less than a fortnight ago.
So first of all, thanks a lot for having me on this discussion. It's a very sobering reality that we're all facing, in the global economy at this point. And this is, of course, the first time in the last 12 to 15 years that India has encountered such a macroeconomic environment. Right. And that is something that we all have to kind of digest, that the global environment today, the global economy today is on the brink of a massive stagflation. There has not been an oil shock of this kind in the global economic scenario, for a long time. And even before this, when there were crises in the Middle East, when there were flare-ups in the West Asian region, there was a sort of tacit understanding amongst Gulf countries to stay off the oil assets and to not attack each other's, oil refineries or oil depots. But we're seeing that in this particular conflict, the gloves are off.
Yeah.
And that's why I do think that this is not a short-term phenomenon. We will see some, pain in the market for a while. But I do think that India's economy is resilient enough to be able to weather the storm.
Okay, many thanks for your opening comments. Just to add to that, Mithali, earlier in the day, there were some inside details that came out. These are government sources that were saying that, they've been ordered to, orders to all the refineries to push LPG production, orders across the board to make sure that India stays resilient. And the larger message out there was that India is better off than other countries. Our neighboring nations, they're still asking and demanding for oil, but domestic use is going to be prioritized over industrial and commercial use. How does that impact market sentiment, essentially, Mithali?
So I think when you think about it from a macro lens, for us, domestic use is critical because domestic use means that the everyday consumer doesn't feel the pain in how they experience the war, right? But we've already seen that LPG prices have been pushed up. That 60 rupee increase per gas cylinder is already coming down on households. So that's definitely one area. But the second aspect is also with respect to managing generalized inflation. We don't want this feeding into generalized inflation. I think somewhere the government will have to foot that bill through fertilizer subsidies, oil subsidies, agricultural subsidies, and then those bills will balloon.
Yeah, so a lot of pressure on the government, and that indirectly will come down to the common household as well. Some more, facts and figures that came out of that particular detailed government meeting on oil supply was that, when it comes to our air turbo fuel, we're safe and secure on that particular front. I think that's going to help the market sentiment as well. But let's bring in other panelists as well. Vaibhav Malu, Managing Director, Enso Group, investor and business leader and expert with us on the broadcast. For the average investor out there, Mr. Malu, watching these markets tumble, those are some grave numbers, 12 point somewhat not trillion rupees in a single day like Monday, about 31 lakh crore rupees since the conflict began. The instinct is often to sell and, cut losses. So in a moment like this, is panic selling going to be the biggest mistake investors can make? And for all those investors out there watching the show, what's your word to take home?
I think we should watch and see how intense the war gets and what the future of the war is, because the rising oil prices obviously affects the fundamentals strongly of the entire global manufacturing and power sectors. So obviously the prices are falling globally, stock markets are falling globally. But we should wait and see how intense the war gets before taking a call on selling your investments. In a bit, will be a dip if this is not the lowest point. We'll get to the lowest point, and at that point, investors, people can actually pick up stocks. A bear would actually pick up stocks at this point. And as far as the correction towards a normalcy, whenever it is established, if you're in it for the long term, you can easily hold on to your investments. And if you've done MTF margin trading and you're struggling, etc., you can choose to sell at this point also.
Okay, so you can choose to sell. That's another word of caution that's coming from the investor expert. Mutual fund investors, Mr. Malu, often worry whether they should pause their SIPs during volatility. We were talking about gold earlier. Mitali would remember. From an investment discipline perspective, should SIPs continue even in this falling market? And I think that's a personal question coming from me as well.
I think it's the dip is too short term in the past to worry about right now. I think if the repercussions of the Ukraine war of 4 years are not to the extent of total destruction of stock markets, it's not going to be this war either, maybe. But here is an OPEC controlled oil area, so the dynamics are different. So we should just wait and see for a few days before you take drastic, you give drastic sell instructions. But you can also choose to wait and watch and wait for the price to be the lowest when you can actually pick up and when you can expect the war to be ending. That's the waiting game bears are playing, and the bulls are holding on, I guess, for the long term. Short term, they're losing.
So the good wait and watch mantra, at least for the next 48 hours minimum. Adit, markets react quickly to global shocks, but historically we've seen it time and again. They also recover quickly once uncertainty fades. But Mitali and Mr. Malu made a credible point. This war seems to be really chaotic. It seems to be maximizing that chaos in the entire Gulf region. We already explained via numbers how important the Strait of Hormuz is, and the government meeting itself said that, the Strait of Hormuz and a supply via that strait is unlikely to resume at least soon. Now, will the crude oil go above the $200 mark? That's something that we'll have to wait and find out. But the government says that it will stabilize somewhere between 120 to 140. All speculation right now. So this crisis is not just geopolitical, it's also economic. How significant do you think is the Strait of Hormuz in this global supply, even as the government says that we're better off, we're resilient, and we have everything under control? So is this mere posturing, or how do you look at these developments? These are government sources that are telling us this.
No, Kabir, I think the writing's pretty much on the wall. Investors predominantly, I don't think are going to be safe, at least from a short-term perspective. Volatility will continue to persist as well, because we've seen the level of attacks that have happened. I mean, this is absolutely unprecedented. From Bahrain to Qatar to Iran, all of their oil assets have been hit, their LPG assets have been hit. And this has never been, even in the 70s and 80s when they were, going against each other, this wasn't a phenomenon that we were essentially, accustomed to or acclimatized to. So this is a first amongst everything else, which is why it raises the uncertainty in the markets, which is why you've seen the kind of decline in the Japanese markets, the South Korean markets. They've taken a hit of 5 to 6%. India comparatively is slightly more insulated at roughly about 2.15%. So we've seen a bit more. We've shown a little more resilience from that perspective, and also India has been able to diversify its imports. They have been able to demonstrate that we are not fully reliant on the Strait of Hormuz. We do have buffers of roughly about 8 odd weeks, but also we do have the option of going back to the Russian crude. We are already in talks with Angola, with Nigeria, with United States for that matter. I think from that perspective, we will be hit, no doubt. There will be repercussions that the markets will see, significant write-off, as we've already seen from a market perspective. I think 8,000 crores, I think is the number that we're getting to hear that was going to be written off. But all in all, I think if we look at the larger trajectory, it's just not the crude oil. It is also your LPG and LNG. Yeah. It is also your urea production. Its sowing season is just around the corner. When that gets hit, your agricultural market gets hit. Automatically, your food prices will start to feel the heat as well. And then, the AI revolution side of things, helium, which is one of the most critical energies which is required for building and manufacturing those AI chips, those semiconductor chips. 30% of the traded helium predominantly comes from these GCC countries. Now, when the Strait of Hormuz gets hit, there is a ripple effect that these kind of
Yeah.
industries will also get to feel. So it's just not limited to industries which are basically exposed to your crude oil and Brent oil, but also to other industries, your agri industry, to your AI sector, to your consumer electronics. Those are going to take a
All
massive amount of
important
hit.
sectors, all important sectors for a country's growth specifically in 2026. Mitali, again adding to that, indoor government meeting, they also said that the waiting period on the cylinder has been increased from 21 to 25 days to make sure there's no hoarding. I think that's another impact that will weigh down onto the common man. But again, talking about the broader impact on India as a country, if crude prices continue to stay above the $100 mark for prolonged period, in terms of inflation, in terms of fiscal deficit, in terms of power of the rupee, where do we stand and where do you see this going essentially?
So I think, the first issue is what is the impact of the crude oil price on the fiscal deficit? And in fact, one of the studies I was reading by a European think tank, and they have actually quantified this for a number of countries. For India, it is, not that high. There are certain
Okay.
countries for whom it is much higher. For example, it is much higher for countries like Bangladesh. It is much higher for countries like Australia, because they also, import a lot of their crude oil. For India, this is somewhere in the range of around $1 to $1.5 billion for every dollar that goes up in the oil, per barrel price. So that amount is, but the overall global impact is staggering. And then if we view it from the lens of being a global economy, an export oriented economy, which is what we were attempting to become. See, in the last 15 years, India has been a domestic consumption driven economy. We've activated our domestic consumption in a way that no other economy has been able to do, barring China. We've built cities, we've built infrastructure, we've unlocked economic value. We've unlocked and we've created a huge swathe of MSMEs and an industrial sector and a services sector. And our services sector is entirely export oriented. But going forward, it was our aspiration to become a manufacturing driven exporting economy, which is why we had all of these trade agreements, right, with the EU, with
Yeah.
the Gulf countries, with the US in the works, with the UK, and even with Australia. Now, with this kind of a war, with such a cessation of global supply chains, with a complete, chaotic environment, we are going to see generalized global inflation. There are projections which show that economies like the UK, the EU will go into recession. And that recession is not going to impact the US, by the way. The US is one economy that is not projected to go into recession, even if the war goes on for 3 months. And that's my whole point, that the rest of the world
Yeah.
might go into recession, but the US will be the only economy that comes out of it unscathed as per IMF's analysis. So I think it's very, very critical for India in this period to safeguard itself, to focus on, strengthening our domestic capabilities, to look at diversifying away from oil and natural gas entirely, and looking at renewable sources again very seriously. And this is something, if you recall, even during the budget analysis, we were having a discussion on this. The one thing that we didn't hear enough of in this
Yeah.
budget was around investments in renewable energy.
Yep. And the dispensation in the United States of America, we've heard Donald Trump say it time and again, drill, baby, drill. He said it again.
Yes.
And I mean, if you really want to understand what country is going to be hit next by America, maybe we now need to focus on the Chinese money trail. Just, a quick word from the top of my head. Mr. Malu, many experts say that crashes often create these buying opportunities. Let's again talk about the average, the common investor out there. Do you see this correction as a potential chance for long-term investors to accumulate quality stocks? In our introduction, we did point out that one safe aspect to look at is the large cap. But would you want to throw some light on that? Is this a potential opportunity as well?
This is not a particularly apt opportunity for risky betting on small caps. But any large cap is safe for the long run. that has already stood the test of time is safe for the long run. Mid caps, obviously the risk factor goes higher, but still is lower than the small caps. Simply because of especially if you are manufacturing and power, because the fundamentals that are the backbone of all these industries is obviously the LNG, the oil, the diesel, the gas, and it's not even like I don't know which affects only steel industry. This affects almost every manufacturing uh, uh, industry that is sector entire gamut of manufacturing sector. So I think it's important to understand that in the long run we don't know what the future of this war is to understand that it is safer not to invest right now. But
Okay.
in
Okay.
a bit we'll have more clarity in a bit. I feel because I myself I'm an investor and
Yeah.
I'm holding my stocks.
Okay, so the investor on the panel is holding his horses, is holding his stocks. Adit, India imports nearly 85% of its crude oil. We've mentioned those numbers right in the introduction as well. In times of geopolitical supply disruptions, and we don't know how long this is going to go on for, how vulnerable do you think India is compared to other major economies? We do fare better, as Mitali pointed out, than some of our neighbors in the near vicinity. But that's not our competition, essentially, is it? And if tensions in West Asia persist, could we see a long-term reshaping of global trade flows? I mean, helium and the semiconductor chips was a great point that you put out.
So I think, I was listening to Dr. Jayashankar's speech earlier this morning,
Yeah.
and the one thing which he put out very clearly that, we prioritize our affordability, we prioritize Indian interests. So it gives me a little bit of, comfort hearing what he did say that, India is willing to look at other avenues. India is not hellbound by its contracts with the GCC countries, and we're looking at Nigeria, Angola, all of these countries as a consequence of diversification. But at the end of it, the diversification also needs to happen at home. I think Mitali was correct to point out that we did not, or rather historically have not put in the kind of efforts that we should be putting on renewables. Renewables should have been one of the main forays of this particular budget, which we I think missed an opportunity with the kind of uncertainties. And this is not something new that is developing. The government probably knew about this kind of a evolving situation way back in November when it started to issue out circulars to Indians living in Iran, for example. So they knew that these are testing times. The world is in a very sort of a volatile sphere at this point, a very volatile junction, and
Yeah.
anything could have happened with regards to Iran. It took months of build up. We saw the kind of military build-up that was happening in the Gulf of Oman, in the Strait of Hormuz, and then even when Prime Minister Modi went to Israel, we saw the
Yeah.
F-22s landing there. So we knew this is the eventuality. But somehow or the other, from a renewal perspective, I don't think we're quite ready. But maybe because the people at the helm of affairs believe that we've been able to diversify rather well. There's a lot of standard Russian crude out in the open seas, which we certainly have access to, which will give us fair amount of insulation going further into at least a few months, if not a year. And I don't think they see this conflict to go on
Okay.
for a year.
Well, the External Affairs Minister's statement that's coming right on the other side, a lot of hue and cry in the Parliament today. It was adjourned. The opposition certainly not happy with just a mere statement. But, Mitali, the final word, how about we not look at the macroeconomist? I mean, how about you take off the economist hat and wear the investor hat for a moment? How are you looking at this volatility in the market from an investor standpoint? How long, from your expertise, do you think such oil-driven shocks are going to last, and how will this affect the emerging market?
No, I think emerging markets across the world are suffering right now because there is, uncertainty associated with global investors who are pulling out their funds from emerging economies and parking it in safer and safer assets. At this point, I think my advice to investors would be to just be patient, wait and watch, keep your, wealth invested even right now in the markets, because at the end the war has to blow over. We have to see a resolution. One can be hopeful for de-escalation in the next 3 to 4 weeks for sure, because Iran is also keeping the pressure in the Strait of Hormuz, and a lot of countries are going to keep the pressure on both sides to come to a consensus, to come to a de-escalation, to come to a conclusion. So it is very critical at this point in time to just wait and watch. But yes, I think I would defer to the opinion of our, investment expert and say, once that wait and watch period is over, that's the time when, you have to see whether you want to take your wealth to safer assets.
Okay, all right. I think we'll leave it here. Interesting, insights from all our experts here. Whilst the markets may be reacting sharply to these oil shocks, and the economist and the investor expert here differing on certain points, I think one thing is clear: this war is not going away anytime soon, and neither are these prices going to come down. So in the short term, I think the wait and watch period, the wait and watch game is the best way to look at it. But this is going to blow over. This is affecting the emerging markets, but this will blow over, and once the dust settles, we can take a reassessed opinion on all of this. The oil shocks, the geopolitical tensions today, the key question, this certainly remains. We've got some insight into this, but not a complete answer. Is this a moment of fear or a moment of opportunity for disciplined investors? Well, only time will tell. It's still early doors on this front. Many thanks, Mithali. Many thanks, Adit Kothari. Many thanks, Mr. Malu, for taking out the time. All right, then, that's an end to this first segment on In Your Interest. On the other side, we were earlier talking about External Affairs Minister's comment and statement in the Parliament. A lot of politics, around it, a lot of hue and cry. Let's try and decode that. That's coming right on the other side. Don't go anywhere.
नितेश श्रीवास्तव जी सिर्फ 35 साल की उम्र में अचानक एक बीमारी से चले गए। उनकी टर्म लाइफ इंश्योरेंस के पैसे बच्चों की पढ़ाई और घर खर्च में काम आ सकते हैं। पॉलिसी